How are you taxed as an S-Corporation? My name is Jim Martin, I'm a CPA, and I'm gonna go over the S-Corporation and how it's taxed in this video. So the S-Corporation is not something different from an LLC. It is, in fact, just the tax designation, or simply put, what tax form you're gonna use to file your business with the IRS. Your LLC, if you have the LLC, you can do this if you have a corporation, but typically you're going to have an LLC and you're actually going to file a form, and it's an election form. And this form just tells the IRS, hey, I want my LLC to be taxed using the S-Corporation tax form. So that's how you get into being taxed as an S-Corporation. The only way to do that is actually filing this form. You have to have a legal entity set up like the LLC, or as I mentioned, a corporation can make this election as well, but typically you're going to have an LLC taxing as an S-Corporation. Your LLC remains intact, nothing changes with that. So that's how you get taxed as an S-Corporation. But what is an S-Corporation? Why do you want to do this? And to do that, we have to kind of go back into how you're taxed without the S-Corporation. And that's probably going to be as a self-employed individual filing Schedule C on your personal 1040. Using that, the business income that you have on your Schedule C is going to be subject to what's called the self-employment tax. Now, the self-employment tax is FICA tax if you were going to get paid through a salary and get a W-2. The Social Security and Medicare tax that you have withheld from those paychecks, since nobody's withholding those taxes for you, you're actually going to pay them through what's called the self-employment tax. And that tax is 15% because you're paying both the employee and the employer portion, whereas if you were a W-2, you'd only obviously then pay the employee, the employer would pay the other half. When you're self-employed, you pay both halves, and that comes up to about 15%. Now, the S-Corporation is all about reducing the amount of self-employment tax, or we call it SE tax for short, because the income tax that's generated from the business when you're an S-Corporation is going to be taxed exactly the same as the income tax portion when you're taxed as a self-employed. Nothing on the income tax portion changes. Now remember, there's two taxes you're paying. You're paying the income tax, and then you're paying the self-employment or FICA, Social Security, Medicare taxes as well. So that's the part that we can really manage using the S-Corporation. The income tax portion will not change. It's just all about that self-employment. And that's because the income from the business now is no longer subject to that self-employment tax. So you'd be saving that 15%. However, you are still going to pay some of that because you do need to pay yourself what's called a reasonable salary. And there's a lot of discussion on what is reasonable salary. Not going to dive into that really any in this video, but you will pay yourself as an employee of your S-Corporation a salary and get that W-2. And as you mentioned before, you're gonna have those FICA taxes because it's a payroll, we call it FICA. You're gonna have those withheld from your paycheck. You're also the employer, so the business is gonna pay that side. So you're gonna pay about that 15% on the portion of your income that you're going to pay yourself as salary or designate as salary. The remainder of the income that you don't pay out through that salary, that's where you're getting your savings of 15%, only on that portion. So you're still going to pay in some Social Security, still going to pay into the Medicare system, but you can manage and not pay in as much as you would if you were a self-employed individual filing the Schedule C. The drawbacks, of course, is now you're going to have to pay yourself a salary and file quarterly payroll tax reports and file yourself a W-2 or issue yourself a W-2 and file that with the IRS. So there's administrative work that's going to go along with that. Also, the S-Corporation is a more advanced or complex, if you will, tax form. So your bookkeeping really needs to be up a level minimum requirements is going to be a little bit higher standards than if you're just filing a Schedule C, just because it's more complex and you just need more information, including a balance sheet would be very good when filing the S Corporation. So you need a minimum level of, sorry about the phone, you need a minimum level of bookkeeping for that S Corporation. The other downside is, in fact, that you are not paying in as much to the Social Security system. And the way the system works, and who knows what it will exactly look like when you reach retirement age, depending on your current age and what changes throughout the system. But it's fair to assume that the system is going to be similar to what it is today, and that the more you pay in, the more you will eventually receive out in Social Security benefits. So it stands to reason if you pay in less in Social Security, you would receive less in benefits in the future date. Something to weigh what exactly that benefit and changes would be. It's really just guessing on today's what the Social Security looks like today, I should say. But that could change, and it could be something, but most people would rather have the tax savings now, especially if you can divert that into your own retirement account and set up your own retirement. It generally works out better that way. The other benefit I didn't really mention is the audit rate on S corporations is actually lower historically than with the Schedule C. The Schedule C actually being one of the highest tax forms as far as audit rates go. The S corporation is then lower on the lower scale, so there is a lot less of a chance to be audited. But if you don't pay that reasonable salary or do some of the minimum requirements of the S corporation, your chances would actually be higher, more than likely, because that is an area of focus coming into the IRS these days. We are hearing more and more. So as long as you're paying yourself a reasonable salary and doing things right, your audit chances actually would diminish, which would be an extra benefit of the S corporation. All right, hope that was helpful. That's a quick high overview of the S corporation. If you have any more questions, go ahead and leave comments below. I'll try to answer those as best I can. If you found value on this, leave a thumbs up. And if you want more content like this, go ahead and subscribe. Thanks.